And we are starting with markets. USDA increased corn production to 15.1 billion bushels, reflecting the updated almost 93 million acre planting estimate from the June 30th acreage report. It left yield estimates unchanged at 179.5 bushels per acre. Ending stocks for the 2021-2022 crop year came in at 1.4 billion bushels. USDA's estimated soybean average yield was left untouched at almost 51 bushels per acre. USDA also left 2021-2022 soybean production unchanged at 4.4 billion bushels. Darin Newsom joined me this week to run through what he's watching.
Here's what's really interesting. We don't know acres. We don't know how many acres were actually planted. I mean, we will at some point this fall know how many acres were actually planted when they're reported to their local offices, and so we'll have those numbers. We don't know what the yield's going to be. We don't know what production's going to be. We really don't know overall what crop conditions are. We can get a good feel for it by continuing to monitor the soil moisture situation, which is showing deficits all across the northern plains and parts of the upper Midwest. So to me, the key is the weather factors. How large is the crop? No idea. Nobody knows. But what we do know is that both the new crop corn and new crop soybean markets, the traders, the commercial side of the markets are not convinced that we're going to have enough new supplies to alleviate all of the tight supply and demand situation that we have right now. We still have a very weak carry in the future spreads of corn, and we have an inverted forward curve in the soybeans. These both indicate that the commercial side is still bullish, still not convinced that we're going to solve our short supply problem. So however big these crops turn out to be, the market is telling us they're not big enough. It's not going to be big enough, at least what we're seeing today.
And Darin, let's move over to corn and soybean export demand. Already interesting what's happening there, but tighter stocks making it even more so, right?
Yeah, it's real interesting because we're about a month and a half from closing out the 2020-21 marketing years, the old crop marketing years. And, as far as soybeans go, we're not going to ship that much more. I mean, we don't have any soybeans left to ship. What's interesting is USDA is overstating right now the U.S. Soybean stock situation. They aren't fully accounting for how tight the U.S. soybeans are. We won't see that until we get around to the September 1 quarterly stocks report that comes out on September 30th. So it's in the corn where things could get interesting. We have to average something like 55 million bushels per week to ship all the 435 million bushels outstanding. So I think we're going to come up a little short of that. We're going to be close, but it's going to come up a little short. Just as they're overstating soybean stocks, U.S. soybean stocks, USDA this time around, different from the previous 4 marketing years, are understating U.S. corn stocks. So I think at some point that's going to work back into the market as well. I think it could add another 200, 300 million bushels to U.S. corn stocks. Still going to be a tight situation. The market's still telling us it's going to be tight. Probably won't ship all of our outstanding exports. We're going to ship most of them. But next year could get interesting again. Let's see what type of demand we start to build up for next year. And the smaller crop in Brazil, the smaller second, the safrinha crop in Brazil, probably going to give us at least an initial boost as far as corn when we start the next marketing year.
And we're in that time of year when a lot of folks out there might be looking to get in that next round of sales. Any advice on that front?
Yeah, it's interesting. Seasonally, this is a time of year when new crop corn and soybeans, these corn nova beans, tend to go down. They both tend to bottom out, say in the late August, late September, somewhere in that time frame. So I mean, if we've made some sales, we're happy with them, we could actually sit back. If we need to make some catch-up sales, we can look for those days when the market really rallies and get a few put back on. The biggest thing is there's really no hurry because, again, fundamentally, both new crop markets are bullish. So once we bottom these things out, once we put a seasonal low in these markets, they should go back up. Now, my one concern is if I go to the cash markets and I look at their continuous monthly charts, both corn and soybeans look to have topped out long term. So, I mean, this is a very complex picture that we're starting to paint where I think the markets are going to go back up, but I do think the cash highs are in. But if we get a good rally, if we get a good post-harvest or during harvest rally, I think it's going to give us some better opportunities than where we're sitting here in mid-July.
And let's finish up with wheat. What are you seeing in the numbers coming in for harvest right now?
What's really been interesting is if we look at the winter wheat, particularly the hard red winter wheat here across the southern plains, and for much of Nebraska, Kansas, and so on, we've had better than average, and in some cases better than expected yields. But the protein has been way down because it was never the crop was never really heat stressed. So we've got good yields. It's just been a delayed harvest because it's been so wet across the southern plains, which is incredible, which is unusual. But the market's held together relatively well. Basis has stayed strong. So what I've been hearing for the last few months is that, particularly across the southern Kansas and parts of Oklahoma, we've seen a lot of hard red winter wheat going into feed because corn was hard to come by. So that area, that major feeding area, has already made the switch. But visiting with folks down in that, down in the southern Kansas part, growing area, they're also hearing that that these feed yards could switch back over to corn if wheat gets too high priced. Now, the catalyst right now in the wheat market is spring wheat. I mean, we've got the dry conditions and now hot conditions going across the northern plains. There's a great deal of concern about the loss of production of spring wheat. We're seeing the spread between cash spring wheat and cash hard red winter go to more than $2, almost $2.30 right now. It's an incredible move. Everyone's wanting to pay up for protein, and everyone's driving the Minneapolis market higher. And this is helping support winter wheat as well. So this is all going to have to play out, but it could eventually price hard red winter out of the feed ration again. They switch back over to corn if we have good crop, and that starts to hit basis a little bit where we've seen strong basis in winter wheat for the last year or so.